If you're planning to take out any type of retirement distributions once you're on Medicare, there's a few important things to be aware of because it can impact your Medicare costs, which oftentimes catch people off guard. So in this video, let's talk about, for those of you who are going to use a 401k, pension plan, anything like that nature in retirement, what to look out for to avoid Medicare surprises. I'm Emily with the Medicare Coach, an independent Medicare consultant, helping our clients easily navigate both the Medicare rules from the government, but also the insurance company options to help you do what's right and best for you to protect your financial savings, but also your healthcare rights. So I'm going to share some extra tips down below to make your life simple and easy for Medicare, but let's talk about how your income in retirement impacts Medicare. For most people, as you go into retirement, you're looking at how are you going to fund your living, right? Income could come from things like Social Security checks. Maybe you're going to work a part-time job, but oftentimes it's also going to come out of your savings, right? Your 401k plans, your Roth IRAs, your pensions, anything like that. And so as we approach Medicare, we want to think about Medicare in your overall financial plan because they really are working together. So there's two things I want you to be aware of. Number one, Medicare does look at your income from 2 years ago to determine what you pay for Medicare now. Why does that apply here? When you are taking out large amounts of money out of your 401k or out of your pension, you could end up paying more for Medicare. As we all know, the 401k and the pensions are usually taxable income. If you're taking money out of, say, a Roth IRA or a Roth, those are all post-tax money, and so those will not impact your Medicare costs. But any income that will impact your taxes will impact Medicare. As I film this in 2025, Medicare says that if you earn income as an individual, right, filing taxes as an individual, and your income is over $100,000, or if you file jointly, it's over $200,000, you will pay more for Medicare. I had a woman a couple years ago who took a pretty large amount of money out of her 401k plan when she was 64 to buy a new condo, as well as some money to live off of. She was very upset once she joined Medicare to realize that she was going to have to pay more for her Medicare premiums because of those distributions. So again, the key thing here is that your retirement distributions, if they're over a certain threshold, can significantly impact what you pay for your Medicare coverage. So there are implications. Your financial advisor can talk you through this, but again, please understand that those things do impact your Medicare coverage. Medicare looks back 2 years ago to what you pay for Medicare today. All right. So again, they're not siloed. They're all interdependent, and understanding how Medicare rules work as you make these income decisions can significantly impact both your overall cash flow, but also your Medicare costs. Again, the two are codependent, so please be thoughtful about that. But Roth IRAs are not taxed. So if you're doing a Roth distribution, it should not impact Medicare. If you're doing a Roth conversion, it could impact your Medicare costs. So again, it gets a little bit messy, but I'm glad you're here because again, it can be important to know the rules so you can do what's ultimately right and best for you. All right, thanks for being here. I look forward to helping you easily make your right Medicare decision.